Welcome to my world of charting. Now, you hear me every day talk about technicals versus fundamentals. Technicals tell you when to buy a stock and when to get out of a stock. How many times have you lost money because you didn't know when to get out? Now, we do technicals by using a simple chart. A chart gives us information. It's like the big institutions giving us a telephone call and telling us what to do, whether buy or whether sell. They give us info. Now, fundamentals tells you nothing except why you should buy. Now, see, the difference is we use a chart. See, if you're a technician, you use a chart. That's your tool, a chart, because it tells you, again, when to buy and when not to buy. I'll give you an example. See these two lines here? These are called stochastics. This gives you a buy signal and a sell signal. See this line up here and this line up here? Same thing. Gives you a buy signal and a sell signal. It gives you the highest probability of when the institutions are going to get out or going to get in. Now, this was a stock that Cramer was pushing. FWLT, Foster Wheeler. I really don't know much about the stock. About the company. I could care less. I know nothing about it. I really don't. And I don't want to know. But I do know this. When he said to buy it, I go look on my chart, and my chart tells me don't buy it because institutions are getting out of the stock. Let me explain. When you see this red line crossing the white dotted line, that's a sell signal. See, this right here is a sell signal. So all the big money managers and guys like me know to sell, to get out. We know that the institutions are leaving that stock. And it's the institutions that drive stocks up and drive stocks down. So that one little tool told me that the institutions, like the big fund managers that run the, let's say, CLAP, the California fund, it's the biggest fund in the country for the state workers, they were getting out. So that was one signal right there. The other signal is, see this yellow line? That's called a moving average. If the stock is underneath that, I want you to think of this as a steel cement ceiling, okay? The stock's trying to get up through the steel cement ceiling. If it can't get up through that steel cement ceiling, well, that's a problem, isn't it? So that, too, is a sell signal. So you see, we've had two sell signals on a stock that Jim Cramer said to buy. Okay, that one and this one, two. So he lost on that stock. If you listened to him and bought, based on fundamentals, you lost about 31% of your money. Now, we made 31% because that to us, not only does it tell us that the institutions are getting out, but it's telling us to short, that's right, to short the stock, to sell it short. So you're making 31%. So these are just two signals of the many that you get on a chart. Now, let's go look at fundamentals, what fundamentals look like. Fundamentals, on the other hand, look like this. If I can find it for you. Just had it here a moment ago. There you go. This is fundamentals. You put the name of the stock in, FWLT, the symbol, and it tells you everything about it. Tells you everything about it. You see, it gives you all this stuff, whatever the stuff is. Market cap, PE ratio, earnings per share, all the stuff that Cramer talks about. And you get a lot of neat stuff. They give you a message board. You want to look at some messages about Foster Wheeler. It gives you historical prices. These are called fundamentals. See, this is the stuff that Cramer talks about all the time. He looks at historical prices. He looks at key statistics. Again, your forward PE ratio, your trailing PE ratio, your market cap, all the fancy stuff that you listen to him talk about every night, and he sounds like a genius. return on assets, return on equity, which is supposed to show you how good management is. And it gives you the profitability, the margins and operating margins, and it talks about how much cash flow. And so that's all called fundamentals. So all these guys like Cramer will take these fundamentals and say, gee, all of these, add all these things up, these fundamentals, and it's telling us it's a buy. You should buy this stock. Now, it's probably correct. Maybe it is correct to buy. Maybe the PE ratio at 5 is cheap. You hear Cramer talk about that all the time. Maybe the price to sale and the price to book is cheap. Maybe the return on assets at 10.82 is terrific in saying that the management is doing a good job, and Cramer brings on the manager. You know how he brings on the manager? He's probably absolutely correct. The profit margins are probably terrific. So fundamentally, there's no reason not to buy it. Or is there? Let's move back. Fund managers have a great many stocks to buy. About 10,000 different stocks. So they don't have to buy this stock. It may be a favorite of Cramer's, but not maybe a favorite of the fund managers. So the fundamentals may be absolutely correct, and Cramer may be absolutely correct that the fundamentals were saying it's a stock you should own, you should buy. But here's the problem. The chart told us it wasn't time to buy. In fact, it was time to sell it short because, again, it gave us a signal, you see. When he told us to buy right here, it was going up against resistance. It was telling us, because it couldn't get out through that moving average, that the institutions were taking their money out. This crossover, we call it, tells us that looking forward for the next 2 days to 2 months or 2 weeks was telling us the earnings, the revenues, and the stock price had a high probability of decelerating. So why do I want to buy a stock that probability, that has a high probability that the earnings, the revenues, and the stock price is going to decelerate between 2 days and 2 weeks or 4 weeks? They're telling you the institutions are getting out because of that. So here you had signal 1, signal 2. So if you followed the fundamentals and listened to Cramer, you would have lost over 30%. If you followed me and shorted it, you would have made over 30%. You see the difference? Okay. There's so much to learn with charting, but charting always is better. Technicals always beat fundamentals. Always remember that. I'll give you one more quick one. Here's another one he said to buy because Obama was going to be president. FLR. Another one of his stocks. Look at this. Same signal came in. The institutions were taking their money out. And you see right here, it couldn't get above that, what we call resistance. What's resistance? That means that the institutions are saying they don't want to, or they're resisting they pay any more money than this 45. Now, there's one more tool we use. Let's go back to FWLT. Remember it says the resistance here they're selling? This is called the X1 tool. I designed this so it will help you to identify what the institutions are thinking. Now let's take a look. FWLT is in what we call a trading range. It has a profit center, okay? It has a profit center. What does that mean? Right here, you see? Between here and here. That means that the institutions are saying they don't want to sell it for less than $21.58, but they don't want to pay any more than $31.07. So as we were watching that stock go up, we knew right here at this point was what they call peak profit, that they did not want to pay any more than that $31.07. Now let's take a look at the chart, see what happened. Exactly. Look at this. Right around 30, here's 31, it fell apart. See it right here? See that? So this chart, this X1, tells us when to get out. And then, of course, it backed up this chart here. So those two charts told us not to buy it and to sell it short. Cramer lost, we won. You see the difference? The difference is, again, fundamentals tell you why, but they don't tell you when. Always go with a chart. Join the gang, Phil's gang. See you on the charts.